Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock. With news, American policies are changing again and the effects are being felt worldwide. The US Fed has kept its rates unchanged at today's meeting and signalled via its dot plot that there are unlikely to be any rate hikes in 2019. They also said they will stop reducing their reservoir of QE asset purchases, scaling back that effort between May and September, after which their balance sheet will be put on hold. Before that news, Wall Street was down noticeably today. The S&P 500 down 0.5% following Europe, which was down much more overnight. Frankfurt tumbled 1.6%. Yesterday, Asian markets ended mixed. But following the Fed meeting, Wall Street rose sharply back into a gain for the day. Since the start of the year, the S&P 500 has gained 12%. Bond market yields have dived. The US dollar has fallen, and that has pushed the Kiwi dollar suddenly higher, catapulting it up to almost 69 US cents. And all of this follows a report that confidence by top US chief executives is on the slide, even as it is at still relatively high levels. The international trade situation is behind the retreat. Hiring plans, capital investment and sales expectations are all dipping at the same time. Senior business leaders are worried that decades of trade expansion could be coming to an end, all driven by misguided US policies. And the US president is compounding the mistakes, as it seems clear he will now not win the concessions he aimed for in the trade talks with China. Few other countries are following the tariff path, however. But the US is building a bigger wall of protection around itself, today ruling that structural steel made in Canada and elsewhere can't be competed with, so their locals deserve protection. All this will build a sloppy and floppy, uncompetitive American economy. In Sydney, the apartment market is quite soft due to a sharp rise in supply, and that's increased the risk to financial stability, says the RBA. Maybe the RBA is placing more weight on the downstream impacts of a falling Aussie housing market now. The US Treasury 10-year yield is down 7 basis points to 2.54% following the Fed announcement. Their 2-10 curve is still at 15 basis points, but their negative 1.5 curve is now at 12 basis points. Gold is up $8 to $1,315 an ounce, and US oil prices are higher today, now just under $60 a barrel, while the Brent benchmark is just on $68 a barrel. Crude supplies in the US are lower than expected this week. And the Kiwi dollar is now at 69.2 US cents, more than a 0.5 cent gain on the Fed move. On the cross rates, we're up at 96.9 Aussie cents against the euro, we're firmer too at 60.5 euro cents. That lifts the TWI to 73.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.